All right, hey everyone, Mark here, Mark P Markets. Hey, thanks for joining me for another Greenbridge Bitcoin analysis. In this session, I'm going to be evaluating Bitcoin briefly, okay, and just going over some details that you should be familiar with. And then I'm going to answer your questions about specific markets or altcoins or whatever you'd like me to take a look at, and we can look at potential scenarios and levels and things like that. So if you're new to the stream, please share your symbol or your stock that you'd like me to see in the channel now, in the text channel. And once I complete my portion of the analysis, I will go through the text portion. Okay, so if it's an altcoin that you'd like to see, please make sure to put USD or USDT after the coin, after the symbol, so I get it correct. Also, if you can, please, one symbol per person. I'm probably not going to get a big crowd today, so if you have a second symbol, just put it on a separate line at least. And if I can't get to it, I'll just try to get to it before I close this thing out, okay? The other thing is, just for a fun fact, if you want to share what part of the world you're from, what city, what country, that's always a nice thing to see. I'm streaming from the greater New York City area, also known as Northern New Jersey, and why I sound like this. Okay, so anyway, I'll say hello to a few people. Hey, we got Izzy. Hey, good to see you. All right, James. Hey, how are you? All right, we got my Romanians. We got Winter. Hey, Wedge. Wedge always has to let us know that it's sunny in Florida. You know, it's sunny sometimes in New Jersey too, Wedge. Sometimes, occasionally. Stian, good to see you. We got Dan. All right, cool. So we got our regulars, Kai. All right, people. So let's get this thing started here. And this is, as you know, it's for educational purposes only. For investment advice, please consult a licensed investment advisor. Also, I just wanted to mention a couple of things. You know, I've been extremely busy trying to get two things going. For one, the transition of Greenbridge over to our new server, the community server. So that is going to change the experience for everyone there. I've been doing that, and I've been working very hard on fixing this streaming situation that I have so that I can get back onto TradingView and all that. So that, you know, that's where I've been placing my focus and my energy. Next, I'm expecting by Monday, hopefully, to be back on TradingView, you know, simulcasting on there as well, which means, you know, I'll have to follow house rules and I won't be able to talk about things like my training program anymore, but that's okay. So anyway, but as far as the training program goes, we have that chat room set up. I have been a little absent from there, like I said, because I've been on top of all these other things, but I'll get back in there. Hopefully people have been doing their work in there and I don't have to kick anyone out. But again, that place, just so you know, the student chat room is for students. And if you're a student, you know, it's really your thing to make the best of that chat room, contribute, and see what others are contributing, and basically making it the community. It's not a place for me to hold hands. Okay, that's an important thing that people need to understand. I get questions, you know, from people that have not been invited to the chat room because they never went through the training program, and you know, they say, oh, but you know, I want to go in there too, and this, but it's only for students. Okay, so a student is someone that's gone through the training program. It doesn't matter how experienced you are. It doesn't matter how many charts you want to share. If you're not a student and you have not gone through the program, the chat room is not for you. All right, that's what Greenbridge will be set up for people that want to, you know, they want to contribute in this and that, but they don't want to go through the training. You can go to Greenbridge. Anyway, my signals, I put two signals in the student chat room so far, right? The Bitcoin ones that stopped out, and then I have that New Zealand one, okay, the New Zealand dollar, which someone in this stream is the one that basically pointed it out. And the trade was actually a little green for a little bit there. I don't know where it is right now. I'll have to take a look. But anyway, so there are signals in there too. All right. So anyway, let's get into this here. By the way, I shared a article on TradingView yesterday. I don't know if anyone saw it, but it's basically about the random location where we're in, okay? And that's what I want to talk about here with Bitcoin. Now, before I get into that, you know today is Monday, so I have to talk about the economic calendar very quick. If you're not in the habit of checking out an economic calendar, you should, because it's very important, especially if you're in like a Forex pair, because there may be an important piece of news coming out, a scheduled piece of news that can affect the range, you know, the range expansion of whatever you're in. okay? And the goal is to manage risk. That should always be your number one goal, not to make money. Everyone comes into this game, oh, I'm going to make money. I'm going to make money. I'm going to turn my $1,000 account into $10,000 like my fake guru told me to. That's, if you're doing that, you might as well just donate your money, okay? Because it's not going to happen. Number one priority should always be risk. How much risk do you have to take? Are you willing to accept this risk? And if the answer is I'm not sure, then you should not take the trade, okay? There are many ways to manage risk. It's not just a stop loss order. All right, anyway, before I go into my rants, because I have some rants today, let's talk about the economic calendar. All right, so I'm just going to scan through this really quick. What do we have here? So tomorrow is the 15th, okay? And for the pound, we have ILO unemployment rate. That's usually not a big mover. No one cares. Claimant count change. No one cares. On the 16th, we have Canada. Bank of Canada Consumer Price Index. No one cares. On the 16th, now for U.S., we have retail sales. We have the Fed Monetary Policy Statement, okay, the FOMC, the interest rate decision. Now, the statement is usually delivered at 2 p.m. Eastern Time. By the way, the time zone changed here, so you may have to make the adjustments wherever you are in the world. We gained 1 hour, so that may affect what time you normally do things. So the FOMC at 2:30 p.m. Eastern Time is when the press conference begins. So at 2 p.m. they come out with what their decision is, and then they come out with their press conference. Now here's the thing: the market has priced in the quarter point rate hike. That's been priced in. So when they come out and say we're going to raise by a quarter point, the market is most likely not going to do anything. Okay, so don't think, don't be Captain Obvious and be like, oh yeah, quarter point rate hike, market should sell off. No, it's priced in. So the market is not likely to react in any type of dramatic way. All right. Now, if there are any surprises, or in the press conference, if there's something about something that was not expected, like, next time we're going to have to raise by 100 basis points. If he says something ridiculous like that, then the market will react. So it's not your job to sit there and read through every little word he says. That's the market's job. Let the market do that. Okay, your job is to just basically let the market figure it out. And then the next question you ask is, where's the price go of whatever you're watching? And are we at a level of significance? If we are, then you're watching for something. Okay, if we're not, then there's nothing to do. It's that simple. All right, so that's the FOMC. Now, going into something like that, which is Wednesday, the markets typically will get quieter going into that. Now, of course, we still have geopolitical drama going on, possibly. I don't pay any attention to it. All I will look at are prices. I see gold and oil basically got hammered, which tells me that that situation is cooling off. Okay, no matter what the news says, I don't care what the news says. Prices tell me the truth, because prices know everything. Okay, the market knows everything, and the market tells the truth. All right, now, so let me see here. Now we have New Zealand on the 16th. That's usually in the evening, gross domestic product. Okay, no one cares. But that can affect our New Zealand position. I have that New Zealand position on NZD USD. Something like that can affect the pair. Maybe it'll bring that pair lower and reach our profit target. All right, so that's something to keep in mind. They're expecting negative numbers, it looks like. Australia, employment change and unemployment rate. All right, again, that can affect the New Zealand somewhat because those two are like cousins. Then we have on the 17th, Bank of England interest rate decision. All right, so that's going to affect the pound. They have their monetary policy statement and a bunch of these other useless numbers here, which I'm not even going to mention because there's too many of them. All right, but that's the most important part. So if you're in a pound or a pound across of the pound, it can have an effect. On the 17th, we also have Bank of Japan interest rate decision. So this whole week is full of interest rate decisions. They have their monetary policy statement and their press conference. Okay, that goes into the 18th. So that's obviously during the Asian session overnight. So something to watch for. There hasn't been a lot of action out of yen or yen crosses, so I wouldn't worry too much about that. And then on the 18th we have Canada retail sales, and then on the 20th we have Bank of China interest rate decision. I don't know if that's really going to have much of an effect on anything. So those are your main things, okay? So this week, basically, you have the FOMC, all right? And then you have maybe some of these other minor ones like New Zealand, like if you're in the New Zealand position, or the pound, right? But obviously, there's a number of interest rate decisions. So it can have somewhat of an effect, but nothing major, all right? I wouldn't worry too much about that, except the FOMC, which is priced in. All right, so with that being said, again, the goal behind that is to be aware so that you can manage risk and also understand your environment. Usually, like I said, when you have these big reports coming out, the environment gets tight, it gets quieter because large players, if there's a lot of uncertainty, they don't want to take risks, okay? So they're not going to place big bets if they have no clue, how the market is going to behave. If they have no, there's a possibility that you can get a range expansion out of nowhere, they're not going to take big risks. That's just the way it is. All right, so let's get into this. Bitcoin. All right, and then like I said, after this, I'll go over your questions. Now, in my Bitcoin article that I wrote, basically we were here. Let me pull up my tool here so that I can show you. All right, we were fooling around just about in here. Okay, basically we were fooling around. When I wrote that article, we were fooling around like right in there. So right there, that's the midpoint of this range. As you can see, we have support at 35K, okay? And we have resistance up in this entire zone is resistance, okay? That's what I'm focused on. That is a consolidation, as Seinfeld would say. So with a consolidation, you're looking at, when you see a consolidation, you're looking at two things. You're looking at the context of the consolidation, which meaning where is this consolidation located? Is it a higher low or is it a lower high? This is a lower high, okay? So our short-term trend, we can argue, possibly even mid-term trend, but short-term trend is range-bound, okay? It's a consolidation that's basically going back a few months, a couple of months, maybe 3 months. The midterm trend, going back further, is bearish, if you want to call this a trend, right? The structure is bearish, lower highs and lower lows. So we have that followed by a lower high consolidation. Why is that important? Because it gives us a sort of a context of what to anticipate in the future. All right, so when you have lower highs, they typically lead to lower lows, right? So this structure, that's why I wrote in my article, this structure favors a lower low. Now, whether we get the lower low or not is another story. So I see a question here from Dan, and I'll answer that question while I'm on this analysis because it's relevant. Reached the 618 3 times in 3 weeks. Do you think it will break or go back if it's reached again? Okay, now that's an interesting question. Dan, I assume that you're talking about the 618 area up here, right? The bearish, the resistance. Is that what you're talking about? So the thing is, think about that question for a moment. Will it go there again, right? That's basically like a yes-no question. I have no idea if it will go there again and break, all right? The better question to ask is what to do if it goes there again. That's really the question to ask because the market can only answer that question, right? I can't. I have no idea. So if it goes back there again, if you're talking about the resistance, well, then that's certainly not a place to buy. I don't buy resistances. I'm focused on the support. In this environment where we have, basically this range, I'm only interested in levels, right? Especially in a range. And this 35K is the level. So I don't know if we'll get there. And I don't question, are we going to get there? I have no clue. Only the market can answer that question. So my question to the market is, if we get there, what to do? Or what will the market show if we get there? That's the question. So if the market shows a reversal pattern in this area right here, then I'm interested possibly in assuming risk, right? Because that fits my criteria. Even though it is aggressive because I'm going against the structure, it's still worth a try, all right? As you can see, there are some previous movements off of that level, right? And in a range, until that range breaks, it's reasonable to anticipate that the support will hold, okay, until it breaks. There's no way to know if it will break in advance. All I can say is that the structure favors a break. Now, thing about signals, this right now at the moment is potentially a buy signal. But what's the problem with it? It's not at a location. It's at the midpoint of the range. People don't understand. A signal carries no weight by itself. A signal has no statistical advantage alone. Okay, even at a level, I don't even know what the statistical advantage is. I have to assume that there's a greater probability. To have a statistical advantage, you have to be able to mathematically prove that there's a greater probability. I can't do that mathematically, okay? So what that means is when you see a signal, something like this developing, instead of getting all excited about it and saying, oh, a signal, I'm going to miss out, it's meaningless. You can flip a coin. Okay, you can flip a coin. If the coin is heads, you go long here. If the coin is tails, you go short or you do nothing. All right, and the result that you're going to get over time is going to be the same. All right, so there's this thing called the game of skill and game of chance, and I mentioned it in my article. People don't bother thinking about this stuff or researching this stuff, but it's very important if you think you're going to time the markets. Okay, in general, markets are not possible to beat. All right, just look at the S&P. The S&P is a very big market. The S&P is pursued by professional fund managers, right? Not those people who do this all day for a living and manage millions of dollars have a hard time beating the S&P. So think about that for a moment. So who cares? I don't trade the S&P. I don't care. Well, if they can't beat the S&P, what makes you think you're going to beat any market? Okay, if you're doing this like part-time or you're a retail trader, you're not managing millions of dollars. Like, what does it matter? Well, someone managing a lot of money has a lot more flexibility than someone with a little bit of money. All right, so there's a lot more things that they can do, and their chances are better than yours for that reason. You know, chances of managing risk and managing positions better because they have more flexibility. Compared to someone with, you know, a $10,000 account or a $5,000 account, there's a lot less you can do in terms of managing risk and being flexible with the market. So, with that being said, when you have a signal appear, it means nothing unless it's at a level. So, in your mind, you should only be looking for levels and a signal at a level. That level is 35K. So, if we're not 35K, I don't care what happens here. I don't care if there's a pin bar. I don't care if if the market draws out. It draws by me here. I don't care what it says. I'm not touching it because the midpoints are highly random. You can get the same result from playing a slot machine. And you've never heard of a professional slot machine player, have you? I haven't, because you can't beat a random number game. It's random. So nothing to do here. All right, unless if you feel like playing the flip the coin game, well, then maybe the coin will work out. But you can't make money in the long run by flipping a coin. Now, so that's one level, okay? If we go back to resistance, now people get very excited when we get up into this area. And every time we get up there, I say the same thing. It's a resistance. I'm not interested in it. In order for me to become interested in that, it's got to break out first without me. And then it's got to pull back and it's got to retest the area, which should be a support at that time. Now, another thing you need to consider about this is, you know, people, again, they're just focused on the charts. Charts don't give us 100% of the information. In fact, charts don't give us very much information at all. I taught my students how to extract particular pieces of information that offer some perspective and some value. Okay, is it a statistical advantage? No. But it puts your mindset in the right perspective as far as looking ahead instead of focusing on these garbage oscillators that are all look behind, right? I see these people. I see some very smart people making these arguments for oscillators. I'm like, man, have they not realized that this is all useless? But I guess not. Okay, anyway, that's why they push. You have to understand something. And I can understand why retail traders have such a hard time with this and why I have had such a hard time with this for more than 10 years. Okay, I've been in this game more than 20 years. People think, well, yeah, 20 years. Right? They think I've been making money that whole time. No, for a good 12, probably over 12 years, I was not making any money. All right, just basically struggling with this, the same as many of you. And you would think that the more time you put into this, the better you would be. But this is not a linear game. This is not exactly a game of skill. And that's why I brought that up. Because a game of skill is something where you learn something, you can show some sort of measurable results over time, right? Just like a chess game. When you start out playing chess, now I know no one cares because no one plays chess, okay, I understand, but when you start out playing chess, if you're a beginner and you have no idea how to play and you have no experience and you play someone that's been playing every day for 5 years, your chances of winning are extremely low. You're not going to be able to have some random win because the chess pieces happen to move their own way for you, right? That's true. That's a pure game of skill. A game of skill is where you affect the outcome of the game. Now, a game of chance is where you have no effect over the outcome at all. So when a slot machine, for example, no matter how you press that button, okay, the numbers are still going to be randomly generated from a slot machine. So there's no skill. Anyone with no amount of experience could walk in, put some money in the machine and win for just randomly, right? That is the market most of the time. So you need to understand that. That's a very important fact. Now, again, I bring that up because you need to know where you stand in that. And the market's not always random. It's mostly random, which means no one knows anything and you can't predict it. There's no way. Now, people like to say, oh, yeah, but I called the market here and the market went there, and it's a coincidence. And a lot of fake gurus get away with that. And when they win, they look like geniuses. But when they don't win, they have some excuse. Like, well, the RSI of the CCI and the moving average happened to look the wrong way and it hadn't worked out. But don't worry, the next one will work out. Just hold on to it. Just have hope, right? Fake gurus get away. They take advantage of that random nature. And when they look good, they push that on people, and people buy their products and services or whatever. And when they don't win, it's the market's fault. They blame the market. But the whole thing is it's random. Okay, you need to accept that fact. No one knows anything unless you're an insider. Then that's a different story. Then you have a clear advantage. But in the stock market, if you trade on inside information, it's illegal. Anyway, so that's my Bitcoin situation. All right. So if we have any type of resistance push, oh yeah, this is what I was getting to. Right. I knew there was a point that I was trying to make and I couldn't remember it. Okay. So the resistance push, right there again. So number one, after everything I just said, there's no way to know if we're going to get that resistance push anytime soon, right? There's no way to know. That's number one. So I don't care how many people are saying it's going to 100,000 and all that other nonsense, which I hope you realize is entertainment now. I hope most of the people here realize that it's entertainment, but there are a lot of people that don't. So that's number one, right? We don't know if it will break. But the next question you have to ask is, if it breaks, even if it breaks like a little bit, let's say it goes over here, what is the catalyst behind that break? That's a very important question that you have to be able to answer. Is it the Federal Reserve? Meaning the Federal Reserve comes out and says, oh, we made a mistake. We made another mistake about interest rates and we're never going to raise them again. In fact, we're going to have negative interest rates. If they say something like that, that can affect Bitcoin. Why? Well, because Bitcoin's following the S&P. You might as well trade the S&P because Bitcoin is basically doing the same thing. Okay, people say, oh no, I'm not in the S&P, I'm in Bitcoin. You're in the same thing. They're all moving together in terms of risk. Now, so that's the first thing you need to consider. What is the catalyst behind it? If it's some nonsense news like, Elon Musk said this, or, some other Bitcoin guru said that, then there's nothing behind it, which means it's probably going to pull back like this. Okay, so you need to understand what is the catalyst behind it. Doesn't mean you're going to take a trade, but you want to know, is this sustainable? The stock market that we've seen over the previous 2 years, it had a ridiculous rally that was relentless for months and months and months. Why? Because the Fed was behind it. The Fed never gave any kind of negative signal, blah, blah, blah. And then Powell changed his mind. Chairman Powell changed his tune in December. And he says, oh, I'm going to have to raise rates now because I made a mistake. The markets sucked since then, if you notice. Okay? This is the Federal Reserve's party. You need to understand how they fit into this whole market system. It's their party. So when they're not behind it, the party is over. And altcoins especially are going to feel the pain. Why? because they're highly speculative instruments. And when the Fed is not stimulating and putting money into the market, that means people with real money are not going to be confident in speculating in things because there's nothing behind it, right? And a lot of people aren't going to be making any money. So all that speculative bubble stuff goes away. That's why you raise rates, because that you're taking money out of the market so that we don't get inflation or runaway inflation, right? So it's all about the Fed. Even if you're not an economist and all that, you don't need to know that stuff. You need to know that the Fed controls the world. Everything begins with the Fed. So the Fed's not behind this, which means if there's any rally on Bitcoin and the Fed is pretty much not behind it, I expect it to go nowhere unless there's a serious catalyst. All right. Otherwise, we're looking at generally strong dollar, which we saw. We'll take a look at those charts, which favors support breaks. All right. So that's basically the overall view of this Bitcoin situation. I've been talking about Bitcoin too long. I have a lot of questions I have to answer. Okay, but I wanted to make some of those important points because, again, people go into this with the wrong perspective. They're going into this with an absolute mindset. They're going into this thinking that markets are predictable. They're going into this thinking that, there's no concept of the random nature. But you have to understand that most of the time you're playing a slot machine and you can get the same result by flipping a coin. No one makes money flipping coins. All right. All right. So let's get into your questions. I hope you found that helpful. And again, I'm taking a lot of this from my analysis that I wrote on TradingView yesterday. By the way, an interesting fact, and we talked about this the week before, and Kai mentioned this even further. If you look at social numbers from fake gurus or real gurus, whatever, mostly fake gurus, if you look at their numbers, right, the numbers have pulled back dramatically. What does that tell you? That tells you retail is lost interest. They're losing interest, right? Because no one's making money anymore. All that easy money is gone. No one's bragging about, oh, I made this money, that money. The casino game is over. Okay, so now when retail leaves, you may say, well, who cares? I'm better than a retail trader. Well, all that was your profit potential right there. Okay, the retail population is where profits come from, not professionals. Okay, fund managers, although they're not that much smarter. You would think they would be, but fund managers aren't necessarily much smarter than a retail trader, and often they react in similar ways. But fund managers have better risk control because they can afford it. They can pay for it. They can pay a professional risk manager to do mathematical calculations and say you should do this and you should do that, right? Because you have $1 billion under management and you can afford to pay someone to handle all that risk. Now, I mention that because retail traders leaving the market, that was your chance to make money, okay? That is where money comes from, retail traders. So keep that in mind. All right, so what this means now going forward is it's going to be a harder market, which means you need to be more selective. You need to be more patient. And, we've been pretty patient with a lot of stuff, and that was in a wild market. Now you have to be even more patient. A lot of people aren't going to be able to handle this. It's not hard. It's just emotionally hard. Okay, it's not physically hard. All right, let's get into your questions. I keep talking. I'll be talking for 3 hours if I keep talking like this. All right, so Winter Fresh. I got my Romanians. Okay, James. Let's say Aussie yen for a short. All right, let's take a look, James. Aussie yen. All right, so again, we talked about, Aussie and yen. They both have stuff coming out this week on the economic calendar. Interesting chart. So look at this, right? Right away, I see a double top. Now, I want to see the bigger picture on this. These crosses, I'm not a big fan of the crosses. I'd rather go against the dollar. But you know what? Sometimes there's opportunities here, and if you follow these things, there could be something. Now, what you have up here is a range high, all right? Now, it's within a broader bullish trend, as we can see here, because this is a weekly going back some time. Look at that. Consolidation range high. So as far as a short goes, now here's the thing. Some people will argue, is this a double top or a triple top? It is, but as I've pointed out before, it's the two peaks in this case are very far from each other, right? This goes back quite a few months. So when I see that, I don't put as much weight into the pattern, but it's still a pattern, all right? The other thing is you have a higher low over here. So there's a possibility that this thing breaks out a short in something like this would be aggressive. Now, is a short a bad idea? No, it's not a bad idea. Let's take a look at the price action. So you have the previous candle pin bar in a ideal location. Not only that, look at some of these previous tails. Look at this area right here, okay? That's telling. Look at this. So there is selling activity. Okay, there has been some selling activity here, and it looks like it's going to be, in there again. This is a sell signal. It is a sell signal because you took out. Actually, I'm mistaken. This is not a. Actually, no, it is a pin bar. I'm sorry. I can't see my eyes. I can't see. This is a pin bar. It's just the bottom has a little bit of a tail. It's not the ideal definition of a pin bar, but it's good enough. All right, as long as one tail is longer than the other, I'll consider that a pin bar. You took out the low of the pin bar. So that's a sell signal. Yeah, so you know what? I would agree, James. That's an aggressive short. Now keep in mind, you have the yen. They're coming out, the Bank of Japan is coming out with their rate statement on Thursday night or whatever it was we saw on the calendar. And the Aussie also has their stuff going on, okay, this week. So that can affect this thing dramatically. So something to keep in mind when you're taking a pair like this. That's when the economic calendar can be useful, being aware of that. But this is a sell signal, and it is at a location where a sell signal makes sense, right? So yeah, I would agree with that. As far as a profit target in this environment, I'm all about just taking what you can and getting out, right? So 1-to-1. In something like this, I would not put profit targets there, So whatever your risk is, if you can make whatever that is, maybe slightly more, I consider that a great win for a swing trade. I mean, Forex pairs, there's no position. Who position trades Forex pairs? You got to be foolish to do something like that. These are not investment grade instruments. But for a swing trade, yeah, I see it. And I would agree let's see, what is the risk on something like this? 85.89 is the high of the pin bar. The low of the pin bar is 85.26. So you're looking at about 50 pips maybe, something like that. You want to give it a little more room, perhaps 70 pips of risk, which means you need to make 70 pips. Now this trade is in play, right, because it took out the low. The low there was 85.26, right? Yeah. And the current price is 84.98. So you're a good, almost 30 pips in right now, right? So you're going to have to add that to the risk if you take it right now. In these situations, when I see something like this, if there's a trade in play, unless I'm feeling really aggressive, I won't chase this. What I will do in a situation like this is I'll put a limit order above the market to see if it fluctuates a bit and taps me in at a better price. And if it never taps me in, I never take any risk, right? But I like to play that game. Maybe you put it 15, 20 pips above the current price and see if it fools around a bit and taps you in. A lot of times it'll tap you in at the better price, which means less risk, okay? And if you never get in, it's no risk at all. Does that make sense? So I like the idea. Thank you for bringing that up. Now, something like this, would I share this in the chat room? I might, unless I come across something better. This is an aggressive trade, kind of like that New Zealand dollar. Let's take a look at the New Zealand dollar while I'm at it real quick. NZD USD, because I put that trade in. Oh yeah, look at that, nice. What are we at here? 67.43. All right, so this trade is working. All right, the target on that is 66.90. We called that. I sent out that trade based on this pin bar. Okay. See that pin bar? This is a great trade example. I put this in the chat room. I put this in the student chat room like a week ago. Look at that pin bar. That was what the trade was based on. See that? It went against us. I could have I was thinking about putting an early exit on that because I'm like, man, I don't like the way this is. But it's not really moving. It's not really a dramatic mover. So I'll just give it to the stop. At that point, I'm like, just let this thing do its thing. If it goes to the stop, whatever. And look at this. Right? Nice. So that trade is working out. Again, chat room, people in the chat room can confirm when I put that out, and now the trade is working. Even if you don't take the trade and you just take it for like educational purposes, you can learn from something like that. Anyway, thanks for bringing that up. Nice to see. All right, Izzy, hey, good to see you. Oh, Euro Aussie. Oh, we got Forex traders. What is Forex getting back into style now? All right, let's see. I usually don't get so many Forex requests. It's usually altcoins. So Euro Aussie, that's what you want to see, huh? Let's take a look. Again, I'm not a big fan of these cross pairs, but let's take a look. Bigger picture. So bigger picture. Now, basically, you're in Euro against Aussie. So basically, you're in the Euro, right? You broke this support over here, which is what? 153, basically. 153 and a half, right? That's the support that you broke recently. Now, that's an important level because that level is likely to behave as a resistance going forward. What's going on here with my charts? Okay, there we go. So, going forward, that's likely to behave as a resistance. Now, keep in mind, a lot of these Forex pairs got thrown off because of the geopolitical drama, right? And a lot of Forex pairs have done some wild things recently. Maybe that's why everyone's getting all excited about them. You have, especially the Forex fake gurus have to be the worst of the worst. All right, they're sitting there pushing like all these dreams, and Forex. The reason why the Forex market is the absolute worst is because it's the conflict of interest is built into it through the spread. People don't realize that, and your chances of winning, especially as a day trader, are extremely low. Okay, because it's not in the best interest of the dealer for you to win, just like a casino. But if you ever watch these videos on YouTube with the Forex people, oh man. They're the worst when it comes to the mega mansions and the what do you call it, the lifestyle hook, the rented Lamborghinis and all that stuff. They're the worst because they appeal to the people with the smallest amount of money, so they have the biggest dreams, right? Forex traders typically don't have a lot of money in their accounts because you can start a Forex account with $100 if you wanted to. Not a good idea, but you can. So they try to appeal to a smaller account crowd, and that account crowd is more susceptible obviously to big dreams, because if you see some of these things that they promote, man, I'm like, you can't make money in Forex like that. What are these guys, nuts? But they're obviously fooling a lot of people. Anyway, swing trade though, you can swing trade Forex. I do it all the time. It's possible, but it's not big dream money, that's for sure. I can't even rent a Lamborghini with the Forex profits. So anyway, but it's still a trade. So here's the thing. I'd be looking for that resistance right there to hold, unless something else occurs. Now, you have a higher low in place. So this is a little tricky, right? Is that higher low a sign of a change? Is this a change of trend? It's a little early. Three-legged structures like this, very brief like this, could be just a corrective move. So the lower high, right, this trend lower high was broken. Okay, fine. You have a possible change taking place. Look at this beautiful pin bar. That's why I put that box there earlier. Look at that pin bar, right? Beautiful, right? Those are what you're looking for at levels. Was that at a level? Let me see. Let's just look back. Is there a level there? Going way back to 2017, there was a level there. Okay, wow. I mean, does that count as a level? Well, there was some significance there. If you could find a level, even if it dates back a few years, there is some significance to that. Okay, I don't put a ton of weight into that, but a beautiful pin bar like that could have been worth taking a chance with an aggressive trade. Anyway, but that's after the fact. So as far as going forward, again, I would be watching this line right here for resistance and looking for selling activity. If you're in something like this, that's a place to sell, to lock in profits. If you're not in and you're looking for a position or something, I would be considering short there, aggressive short. But it's still, if you get the development of a bearish pin bar there, that's still a lower high relative to this high. Okay, so you can get that lower high anywhere in here, anywhere. And even though you have this little mini higher low. Now, if this higher low was more pronounced, like back here, right, that's a little more pronounced. It took a lot more time to develop. I may take that more seriously, okay? Especially when you don't have a break like this. So just keep in mind, though, there is geopolitical pressure behind that, so maybe this thing's going to change. But that's how I would treat this thing right now. Again, keep in mind, you have a bunch of, you have that Aussie economic information coming out this week that can affect this pair. All right, so anyway, thanks for asking. All right, I'm going to move along here. I'm just talking way too much. All right, so I answered Dan's question earlier. Stian. Oh, I skipped Stian's question. How can I skip your question, Stian? Can you have a look at Alphen on the Euronext? It has a double bottom and it was in an uptrend. All right, what do you think? Okay, let's take a look. Alphen, let me just type that in. Alphen. Alphen. And that is in the, you said the Euronext? Okay, let's take a look here. Euronext. All right. So here's Alphen on the Euronext. So let's see. Now you're mentioning here it had a double bottom. All right, and was in an uptrend. All right, so here's what Stian's talking about. Double bottom. That's a nice double bottom. I mean, look at there's a nice amount of time between the two bottoms, but it's not too long, right? A few weeks is acceptable. Okay, it reversed. Look at the gap. Nice. And after the gap, you started getting higher lows. Now, let's talk about this higher low situation. Just like we looked at that previous Euro-Aussie pair, right? It was kind of similar to what happened over here. Now, after that initial higher low, it made a higher high. That changes things when it does that. Now, once you have that higher high, the next higher low, which is likely that old resistance, that can become the opportunity, right? The opportunity to go long. But look how much time you have to wait. You have to wait at least, you have to let it do all of this, not do anything. You have to let it pull back. That's like a week's worth of waiting and hoping, I shouldn't say hope, but basically looking to see if it retests that level. And then that's when your opportunity becomes apparent, but it takes time for that to occur. So now Steve's question is, what do you think of the candle today? So right now, that was potentially a sell signal. Look at the location. First thing I want to look at is location, right? Look at these resistances. So you have a potential sell signal in a resistance area. Let's take a quick look at the weekly chart and just see where we are in the bigger picture. So you're nearer a high than you are a low. That's pretty clear. Right? These are the highs over here. And look at that on the weekly as well. I mean, today's Monday. It's the beginning of the week. So, of course, we're going to see the same candle. We have to see how that plays out. But you're still in a location where selling is more likely here. Not only that, but you have a failed high relative to this high right here. If you do the failed high measurement, which many of you should know from my training program, and I haven't spent a lot of time on that, but I mentioned it, right? You guys should be able to at least measure that. That's potentially a failed high, right? Failed high location. So definitely a place not to buy. It's definitely a place to take profit. If you have profit in this thing, certainly a good place to take something off the table, because look at that candle. If the candle closes like that, and you take out the low of the candle, which is what? The low of this candle is 85.60. That would be your sell signal. Okay, now how far does that sell signal go? There's no way to know. But your next support, actually, look at this. It touched that. This is your old resistance, which became a new support. It touched it in the single candle and sort of bounced off of it. But that's too tight, right? I mean, I wouldn't take a trade like that. You'd have to wait for a signal here. There's no buy signal. We're talking about a sell signal. So that support is not going to count as much. Does that make sense? So your support really is going to be here. That's what I'd be looking for, that area there. Also, you can draw your fibs on this. All right, you guys know how to do that. And you could look for supports there. Your 382 is the first one I'd be looking for, that area there. See that? All right, and if you go slightly below the 382, right, into that midpoint area, again, that's the area where I drew the rectangle. It lines up. That's an area to consider, all right? So that's where I'd be looking for longs if you're interested in longs. But right now, no long. Anyway, good question. Thank you for asking about that one. All right, a wedge. All right, good to see you. Winter, I'm just getting through here. So I covered Aussie yen. All right, I covered Euro Aussie. Kai, dollar index. All right, see, Kai always asks me about the heavy in the economic gauges, the dollar index. People, you should be paying attention to this, because this is a reflection of the Federal Reserve. Same with the bond market, okay? Now, the dollar index, does this look like a bullish trend to you? Does it look like a bearish trend? I've been arguing that the dollar index has been in a bullish trend since August, and that rates are rising. The bond market was pricing in rising rates since August, which gave a lot of warning signs, especially to all those morons that were buying in December at the December highs, right? I was telling people, don't buy stocks here, don't buy stocks here. They're vulnerable. They're vulnerable. Hey, don't listen to him. He doesn't know what he's talking about. The news said stocks are going higher. Yeah, we're at new highs. How can he call this a weak market? It was a vulnerable market. All right. Anyway, my point is, I got that not because I felt like saying it. I got that because I saw the dollar and I saw the bonds. Anyway, the dollar has continued. Even though the dollar had this pullback, again, this gets everyone excited. Oh, dollar's pulling back. Oh, we're back in hyperinflation. No, we're not. The dollar is nowhere near a bearish structure. In fact, as you can see here, we have a higher low. So that is likely to lead to a higher high. Yes, we have a bearish pin bar right now, but this is nothing on the dollar. This is meaningless. You can't count that as anything, okay? Even though it's a little mini resistance, doesn't matter. It's the overall structure that matters here, especially for the dollar, all right? So this implies a lot of information. This implies that the bond market is going to continue lower. Let's see where the bond futures are. What a surprise! Bonds making new lows. Interest rates are going higher. Higher interest rates are bad for a lot of things. People have been asking me about gold, all right? Oh, what do you think gold? Do you think gold's going to go to 5,000? Because my fake guru told me it was going there. No. I told people, but if you have gold, I'm bringing up gold right now because of this situation. If you have gold above 2,000, if you thought that this thing was going to go to 3,000 because some moron told you it was going there, and you're still stuck in it, that's your fault. Because gold and oil and anything else that trades against the dollar is extremely vulnerable. So any push to resistance is likely to be a short, or at least not a long, at least. Okay? Bond market, new lows, means dollars going higher, means rising rates. So until this thing changes its tune, you have to go with that scenario, right? Which also is bearish for Bitcoin. All right, and all the altcoins, because, well, how can that be? It means that the Fed is not behind any rally. Look at this rally on the bond market, right? That was a result of geopolitical. In fact, when I saw that rally, it doesn't make sense. Why would the bonds rally? But, you know, markets are irrational. The bonds had that little rally, but what did I tell people? If you go back and listen to my bond analysis, I said it's really, in order for this thing to really make some significant moves, it needs to start taking out some important resistance levels. Not rally up a little bit and then here we are, lower high, we're at the lower low, okay? So that right there is a telltale sign that stock market is not going anywhere anytime soon as far as magical rallies. Same with Bitcoin and altcoins. They're going nowhere anytime soon in terms of magical rallies. I have to emphasize that because there's a lot of monkeys out there that come out with these altcoin analyses. Hey, this is just getting started. I remember how many of these fools, these fake gurus, when Bitcoin was at 60K, how many of them came out? Hey, the rally is just getting started at 60K. Okay, the rally is over. So when I see something like this, chances are we're going to break 35K. I mean, that's what that tells me, because we're going into an environment that's getting harder and harder. Right, you're fighting the dollar, and the dollar is the world reserve currency. It still is. Until it's replaced by yuan, it's still the world reserve currency. All right, anyway, so that's the dollar index. Kai, thank you for asking. It's a very important economic gauge, and you know, when you're looking for just like a general feel of the environment, you should be looking at the dollar. You should be looking at bonds, right? Because that's where this game begins. All right, winter. Let's take a look. XRP. Okay, here we go with the altcoins. You notice, no one asks me about Cardano anymore. No one asks me, now I'm getting more Forex pairs, right? No one asks me about all those VeChain and all those other worthless coins. And imagine where NFTs are. All those morons that bought, you know, worthless graphics for $40,000. Imagine getting stuck in that bubble. Anyway, XRP. Now, you have this resistance, right, in this area here. Now, XRP, again, 93, what is that, 93 cents in this area right here, a little around there, something like that, right? What is this high over here? 91. Yeah, so you're looking at the low 90s, right? This area right here. That's your resistance. So until you take that out, clearly take that out, you're not going anywhere with this. Right? Let's take a look at the weekly chart. This thing's a piece of garbage, right? It's a highly speculative altcoin. It's in a consolidation, right? All opinions aside, let's remove my not so optimistic opinion, and let's just talk about this from an objective technical perspective, right? You're in a range, and it's fooling around near the lower part of the range. This is the weekly chart. So if you're interested in doing anything with this thing, and if you're interested in anything, it's more likely you're better off taking swing trades, because position trades in something like this, it doesn't make sense, because this thing can go a lot lower, especially in an unsupportive environment. As you will see, many altcoins are going to go lower, right? Because they're highly speculative, just like penny stocks. So you have this old resistance around, what is that, the 70 cent area? It's a support now. So between 70 cents and 50 cents, that's your support area, all right? This area here, this is your support area. Right now you're fooling around at 76 cents. So this thing could basically go into the 60s, it can go into the 50s. That's where you should be considering a swing trade if you're interested in any kind of risk in this thing. Other than that, there's nothing to do here. I wouldn't touch it. All right, with Bitcoin and an unsupportive environment coming, I would be less optimistic about supports. So you should be very selective with your confirmation and wait for those levels. If you happen to buy at a good price and you have some profit, it's not a bad idea to take some off the table. All right, again, there's going to be a lot of nonsense and a lot of hype and a lot of talk about the future. Just hold on to it. Remember the tagline on a lot of those fake guru videos? Early investors are going to make billions. Do you remember that? That was back in December. Still waiting for the billions. These things are going nowhere. So there'll be at some point, will there be a change? Well, yeah, when the Fed changes their tune and we start to see more of an easing, because they're talking about quantitative tightening. I saw someone had mentioned quantitative tightening. I haven't heard that, and I don't think I've ever heard that before. Quantitative tightening. It's always been quantitative easing, right? So they're really serious about taking money out of the market. These things are, the party's over, like I keep saying. So you should definitely have lower expectations. Now, will there be a time to pile into some of these? There will be, of course, but it's going to be a lottery ticket game, just like it was previously. You don't know which coin is going to have the spectacular results. Basically, you can do like a random, put all the names in a hat and pick one out randomly and trade them that way, right? Oh, look, I picked VeChain out of the hat. I'm going to invest $100,000 into that. Hopefully that's the lottery ticket, right? That's how you're going to have to play that game, because they're all the same. None of these things, no matter how great their white paper is, no matter how great their idea is, they're all in the same boat. They're all garbage. So understand that's the game you're playing. So as far as XRP goes, yeah, that's the story. All right. My point is, will there be a time when these things get really hammered and this thing starts taking out the lows and all that? Yeah. If you see that, if that time appears and you say, wow, these things are so low that it's so hard to argue with these lows, and you want to throw a couple of $100 in, that would be a good time to do something like that. When all these retail traders are getting banged out because they all got sucked in because they watched too many fake guru videos and they're banging out their coins because there's no hope at that point, that's a good time. All right, we're still far from that. So anyway, that's the story with XRP. Okay, Kai, AMC. And thanks for mentioning that's your second request. AMC. So this is like the GameStop situation, right? This had this nutty move back here was a result of that GameStop, the institutional short squeeze nonsense. As you can see, right, this thing is not doing too well, right? Lower highs, lower lows. Looks like it's going for the lower low. Now, I can see, Kai, why you bring this up. You got a bullish pin bar developing today. Is the market closed yet? The market's going to close here momentarily. So you have a bullish pin bar at a potential failed low. Now, this is a long signal developing if you take out the pin bar high tomorrow. What is the pin bar high? The pin bar high is, let's see, can I read the chart here? The pin bar high is 1416, right? Right now, this thing right now is at 1362. So if you take out 1416 tomorrow, that's your aggressive long. Now, the thing is It's aggressive because you're going against lower highs. There's no higher lows. You don't have an established double bottom. Theoretically, this thing should go lower based on this structure. So if you're going to go for the bounce in something like this, okay, I can see that as an aggressive swing trade, but your expectations have to be low. Your profit target's going to have to be inside of this range somewhere. And the way I gauge that, because I look at profit targets as basically just a function of risk. People always ask me, where should I put the profit target? You know, should I base it on this? No, it should be a function of your risk. So if you risk $100, then you should be looking at least making $100. That's where you put your profit target, because profit targets are random. So in that situation, 1-to-1 is acceptable in this environment. If you can get 1-to-1, if you can get greater than 1-to-1, like 1.5-to-1, I would consider that a home run, considering these things, you know, you're fighting the general trend. All right. It doesn't mean it's a mistake or it's a bad idea. It's just understand what you're dealing with and adjust your expectations. Right. That's what a trader does. So anyway, thank you for mentioning AMC. Okay, Ing, let's see. AVAX. Okay, let's take a look. AVAX. USDT. I haven't heard from that one in a while. Let's see. So as I suspect, a lot of these coins are going to look bad, right? First thing I want to look at is the weekly chart, just to kind of get a sense. Because the general structure there is bullish, right? Generally, higher lows and higher highs. But the midterm structure is not bullish. We have a lower high, and we have a lower high over here, right? See that? So theoretically, a lower low is likely. Now, the bigger picture, though, is bullish. So this is where the conflict comes into play. In a situation like this, you want to look at your larger magnitude supports, right? You have one over here. That's your larger magnitude support. So if you get a buy signal in that area, it would be a possibility for a swing trade. How much money is this thing? $65? Okay. So at the moment, for one, some people may think that this is an area to buy. Technically it is, but there's a lot working against it. There's no, first of all, there's no buy signal. There's no bullish pin bar. There's no signal at all. There's nothing there. So no reason to buy right now. All you have is a location. But this thing may break right through with no problem. That's what you have to watch for. If it breaks right through, you're looking for test of this area here. Okay? And that price happens to be, what, the 55 area. So this thing's got some room to fool around and go lower. I would watch for that 55 area. If you're interested in any type of trade, that's where you should be looking for a buy signal. And just like that AMC chart we just looked at, your expectations should be low in these things. If you're thinking investing, I don't know what to tell you about investing, because these things are not good choices for investing. If you want to invest in something, you know, you look at quality stocks like Intel. Look at Intel getting hammered. That's a quality stock. Intel is not going out of business anytime soon. They dominate their industry. Okay? That's a quality stock getting hammered. That's what you invest in. And now is probably a little early to do that. Let's just take a look at the S&P real quick. Let's take a look at the S&P. Weak S&P today. What a surprise. Lower high, right? Is it going for the lower low? We'll see. But as you can see, we're no longer in a party market. So the lower low would not be surprising. Would I short this here? Definitely not, because we're not at the resistance. We're going into a support. And there's a good chance we get buying activity here, right? At least temporary. I don't want to short into that. The risk is way too high. So I want to see a resistance. I'm just bringing that up as an example. I know you didn't ask, but I'm just bringing that up. Like, how do you treat something like this? It's weak. It looks like it's going to break support. So people think, oh, I should short it because it's going to break. No, you're shorting into a support. What you don't see is what the problem is. People react to what they see. That's how we're brought up, right? You react to what you see. In the market, you have to consider what you don't see. You cannot see the risk of shorting something like this. You can't see it because you're going by what you can see, which is obvious. Okay? You cannot see the buy orders that are over here in this area, or you cannot see the potential of who's going to step in to that trade. If there's some sort of buying activity developing, the algos and the funds and all the people that know how to play this game, who will step in there with market orders. You can't see that because the market orders aren't there yet. So when something like that occurs, right, you have to consider what you can't see, the risk. That's what's invisible here. the risk. So I wouldn't short that. No way. All right, that's the same as buying into a resistance. So anyway, thanks for asking about AVAX. Hey, Sirhan, good to see you. Okay, BAR, what is that? BAR USDT. Let's take a look. So, not familiar with this one. So this is what I like about doing these streams, because people bring up some coins and some symbols that I just don't really keep track of, and we can possibly find a new opportunity. I mean, I got the New Zealand trade from this stream. So anyway, let's take a look here. So generally, we have a lower high, right? This is definitely not a good structure. There's nothing bullish about this structure. We have a potential another lower high developing. Now, you can argue that there's a little mini double bottom going back a few weeks, and it's reacting off of that. Okay, I can understand that, but let's go to the daily chart. Man, why is this thing slow like this? It's a problem today. Okay, there we go. So I can understand why you may say, okay, but look, double bottom, and it's changing. It took out that resistance. Okay, it's a potential change taking place, but the longer term structure is persistently bearish. So you have other resistances that you have to consider, especially that one right there, okay? Going back, this area right here, that's going to be pretty important. So I wouldn't do anything with this. It's a $7.89 altcoin. It's in a sector that's not supported, okay? Because these are highly speculative. So chances of this thing going anywhere are low. If you're going to do anything with this, wait for another test of support. I mean, where's the support here? You can argue that that's a support, but that's going to be more of like an intraday support. It's too close to the price action right now. You're going to have to look at the double bottom area here, which is $5.30. That would be more of your swing trade support. And if you're going to take any type of swing trade on something like this, just keep in mind, you have to have very low expectations until the market proves otherwise. Now, when it comes to altcoins, again, you're using Bitcoin as your gauge or you can use total, right? Total, that's the total market cap of all these garbage coins. And until this thing changes its tune, because right now it just looks just like Bitcoin and Ethereum, lower highs, lower lows, with a range lower high. Until that thing changes its tune, the party is going nowhere. So all of these altcoins, you should be less optimistic. If you're going to take a trade, have lower expectations. Okay, I don't want to discourage people from taking trades altogether. There's still opportunities. Just understand what your potential is. If some fake clown guru told you that this thing is going to be at, it's going to 10x by next week, hopefully you can see through that. All right, anyway, let's move along here. So that was Sirhan. Thank you, Sirhan. Schwartz, my international man of mystery. I saw his name there earlier. I was relieved. Schwartz, because when you have periods of geopolitical tension, Schwartz gets very busy, because when you're an international man of mystery, you have to take care of these things. So anyway, thanks for joining us, Schwartz. I'm always happy when I see Schwartz here. All right, Kim, I am short NSX. Short NSX. The SQQQ. So I guess you're long. You must be long this thing, right? If you're in SQQQ, that means you're long, right? And you basically benefits from a short Nasdaq. Okay, fine. Now look at this. Look how this thing has popped recently. Well, that's because the Nasdaq's getting hammered, right? So in a situation like this, you don't look at the SQQQ chart. It's not going to be that useful. You look at the Nasdaq chart, because that's where it's a derivative of that, right? So the Nasdaq is on its lows. Right? Now, so you're short, and you're short from a good price. In this situation, this would be a good spot to maybe lock in a little profit if you can. But if you want to be more aggressive and try to hold it and let it run, well, you're on the right side of the structure. So it would make sense to let that short run, or let your SQQQ long let it run, because this thing is likely to make the lower low. All right? How much lower will it go? Again, there's no way to know. This thing can react to every little thing, and you are in a risky location. A reversal can easily appear here out of nowhere. It's just something to keep in mind. That's why if you're in from a great price, meaning if you're in from like something like this and you're here, certainly a place, or if you have 1-to-1, if you've reached 1-to-1 or more, take something off if you can. Otherwise, Let it run until a reversal appears. Now keep in mind, a reversal can be one giant candle that looks like that. It can come out of nowhere. You know, we have FOMC on Wednesday. If Powell says something unexpected, or the press conference, something comes out unexpected, you can see something like this out of nowhere. So, you know, the chart is not going to warn you of something like that. You have to recognize the risk around your location. So I agree with the short side. If you manage to take that short, great trade. This is certainly one you want to let it run until it starts to prove otherwise. But keep in mind, you say, well, how much should I let it run to? Where should I put my profit targets? Think in terms of risk. So 1 to 1 would be a profit target. 2 to 1 would also be a profit target, right? That's how you should look at it, something like that. Instead of what level should I put my risk? I mean, we can do fib extensions and we can do things to pick out some levels. But in this environment, I think you're better off just focusing on what's simple and taking money while you can, because things can change so quickly. All right, if that geopolitical situation cools off unexpectedly or for whatever, you're going to see things turn around real fast, right? So just something to keep in mind. Anyway, thank you for asking. I was talking about the 618 at 3780. Oh, okay, Dan's correcting me there on Bitcoin. So let's go back to Bitcoin. So Dan asked me earlier about the 618 on Bitcoin. All right, and he's talking about the long 618, right? I guess it's around there somewhere, whatever, 37, whatever he mentioned. Okay, because I know there's a short one up in here somewhere. Yeah, so again, his question was, is it going to hold? Is it going to stick? Again, there's no way to know. So we're getting the buy signal here. This is not a significant support level. Even though there's a 618 there, I would be very careful with that, because you also have to consider the entire range, not just the fib. This is the range, okay? So, I mean, look, we can draw from a low to a high. So you're considering the 618 of a fib. Now, it's possible to get bounces off of it, but you can't look at the level like precisely. What you're better off looking at is the range below the level, right? The 618 and lower. That's really the area that you should be more concerned with. It's lower risk there, plus you're near the range low. So like I said before, you may get a signal here, but I wouldn't go near that signal because you're in the midpoint of the range. I have no interest in that at all, because it's 50-50. You could flip a coin and get the same result. So that's how I would treat that. Same as the bearish argument. I mean, it's the same thing. Anyway, thanks for correcting me. Hey, Chris, good to see you. Got all my students in here. Kai posted a similar view on BTC. Oh, not reading our, looks like some of your, oh, good. Thanks, Kai. Yeah, see? So, cool. Yeah, there's been some nice charts in there in the chat room. Like I said, I've been working on some stuff, but I will be participating more, you know, so I apologize for my absence. I have so much stuff on my plate and I have no one to help me. So, you know, I'm pretty much on my own. Kai, banning proof of work today. Okay, and it not okay. Interesting. So some political stuff going on there. Kai mentioned. Thank you for mentioning that. See, again, in those type of situations, people may put a lot more weight into something like that, and it doesn't matter what people think. It doesn't matter what people's opinions are. It doesn't matter what logic tells you, right? You may think, oh, well, you would think that because of this rule, this should happen, and blah, blah, blah. All that matters is how the market reacts or how the price processes that information. I don't try to chase the price or react to the price. The price tells me what it wants to do, and then I look ahead and say, okay, you want to change, you want to do this? Well, then how should I adjust going forward? That's all I'm interested in, right? So I don't look at right now I'm missing an opportunity. I look at, well, what's the next opportunity look like? I'm always a step ahead. I'm not at where we are now, and I'm not behind. I'm looking ahead, which means there's a lot of times I'm going to miss moves because I don't react to stuff. But I've saved tons of money from reacting to stuff, let me tell you. Anyway, so thanks for mentioning, Kai. If you like that type of pin bar, you can see one on the weekly BTC chart. Well, so weekly BTC, let's take a look. Is TradingView going to give me a hard time here? Oh, well, no. So there's a, what is that? I guess, Kai, I guess you're talking about this one right here, right? That one. There's pin bars all over this thing. Now, see that bearish pin bar? People will also be confused by that. It's a pin bar, so people focus on the pin bar. Oh, there's a pin bar. Yeah, but the location of that pin bar isn't very good, right? That's why I wouldn't really give that much weight. Now, if we were at a very specific resistance and that pin bar appeared and the low of that pin bar was in that resistance, then I would be more excited about it, because it's the location that is compelling, not the pin bar. Does that make sense? The pin bar is a form of confirmation, and the pin bar allows me to quantify risk. That's all that's its purpose. As far as giving me some kind of accurate, oh, here's an opportunity. Pin bars, just like everything else, are random. A pin bar can appear anywhere. Okay? Anyway, so let's move along. Okay, got that. All right. Wedge posted. Okay, cool. So Wedge was calling for a short on the Dow. Let's take a look. We could take a look at, let me see. Okay, US 30. Yeah, I like to look at the CFDs. Okay, so here's the CFD of the US 30, the Dow Jones Industrials 30, right? 30 stocks. Of course, if the Nasdaq and S&P are getting hammered or they're bearish, this is going to be right behind it. Okay. Now let's take a look here. Sometimes there's some variability. They're not exactly moving the same. Again, this is only 30 stocks, and the way they're weighted in the index is not the same as the others. So sometimes you get a different look as a result. Bearish pin bar. So I guess, Wedge, that's what you were looking at, the bearish pin bar, lower high potentially. Yeah, okay, I could see that. Theoretically, it's the right idea. Theoretically, it should make a lower low. Okay, you're not on that low. Price is not on this low yet. I would expect in this environment and in this situation, hold on a second, in this situation, we should see something. Okay, so the lower low is likely, but do we get it is another story. We can also get a bullish reversal there, and that would be a triple bottom. That's a great idea for a swing trade long or a day trade long. Something like that would be very aggressive. But the short side here is also reasonable. Okay, I'm not going to call it exactly conservative because you are at this. It's still near that low, but it's still reasonable. All right, and the lower low is on your side. The structure favors the lower low, so not a bad idea. Nice call on that. Nice observation. Thank you for bringing that up. Okay, Cardano. All right, Dan's bringing it up because I was giving people a hard time. No one brings up Cardano anymore. Let's take a look. Cardano, what a piece of garbage. Now, you know why I get on this case? I remember people used to say to me, they say, "Oh, can you take a look at Cardano and don't yell at me about it? Don't yell about it." It's not that I'm angry about Cardano. It's just the hype was so bad on this thing that so many people got fooled on this. Look at this thing. This is the weekly chart of Cardano. This is garbage. Okay, I mean I can't put it any nicer. Garbage. Look at this. Failed high. How many people got caught up here? All right, lower high, lower high, lower high. What's the price of this thing right now? 79 cents. So theoretically, this is a much better location than we've been previously, right? Now, of course, there's no hype in these things right now because everyone's got hammered from all their hope and listening to their fake gurus. And what do the fake gurus say? Well, it's the market. Meanwhile, the fake guru got away with all of the money that you paid them. Okay, not you, Dan, but they also got away with all the endorsements because fake gurus get paid to push coins on people, as we know. So they made all that money, and that's who gets rich in this. And now, while you're stuck holding this garbage, the fake guru goes off and starts pushing something else, right? And gets paid with his affiliate links on whatever. That's the fake guru business. Why people continue to support them? You know why? Because people need to be lied to. It's hope. Hope is like a drug. That's why they do so well. Back in my day, there were fake gurus. We're talking, when I started out. But a fake guru back then really had to appear to be real. Okay? None of this, I'm not using my real name. Like, you had to know who they were. They had to have some sort of industry experience. Like maybe they were an economist somewhere. They ran a hedge fund. Something like that. Okay, they wrote a couple of books, like real books that get published by a real publisher, like that kind of stuff. Today is just unbelievable how people get fooled by this stuff. But you ask, it's irrational behavior. Why would people believe a 15-year-old kid still living in his parents' house talking about Cardano, right? Why? Because he's analyzing their Twitter feed. Why? Why would? Because people need to be lied to, and the emotional need is greater than rational thinking. Does that make sense? So when you need to be lied to, you listen to anyone, even if it's some 15-year-old kid with absolutely no experience telling you that Cardano is going to go to the moon by tomorrow, blah, blah, blah. You want to hear that, okay? Whether it's rational or not. That's the liability of human nature. And we all have that liability, and we have to learn to minimize it, right? That's what I basically teach you in my program at the beginner level. So anyway, Cardano, garbage, lower highs, lower lows. What can we expect from this? Like I said before, it's a good location for longs, all right? But there's no reason to go long here besides that. In a situation like this, since the environment is unfavorable, there's no reason to rush into this. Why not put like a, like a notification thing out so that if it reaches a much lower price, a dramatically lower price, if you want to pick up some for the long term, that's where you consider it, right? Not at these prices, because it has a lot of potential to go lower. And like I said before, I'm not a fan of investing in these things, but these heavy hyped ones like Cardano, when the market comes back, a garbage one like this is likely to pop. But keep in mind, this thing has a long way to go as far as much lower prices. So you may see a Cardano possibly below 50 cents. What is this thing right now? 79? This thing could go back into the 40s. All right? So if you want to play that game, the lottery ticket game, you might as well wait for the best prices, right? No reason to start buying into this thing right now. So that's my opinion. Again, part of this has to do with the fact that we're not in a speculative environment, and that these things, there's not going to be anything significant keeping these things going. Like a pop right here, like this, right? When you see this, something like that, I bring this up again because, and I bring up the fake gurus because a lot of that comes from hype and fake guru nonsense, okay? A move like that. So when you see a move like that, you go on YouTube, Cardano is going to 1000x by next week because they have this announcement and all this other garbage. People buy into that because they think, oh, I'm getting the bottom this time. And you're buying into an environment that is not going to support you. The fake guru gets paid, but you don't get paid. All right? So all you're doing is making the fake guru rich. But no, I'm not. I'm just watching the channel. I'm not supporting the fake guru. But by watching the channel, you're giving him a like. You're giving him your viewer attention. And YouTube will reward the fake guru and spread those fake guru videos to other unknowing and ignorant herd members who will then buy this thing. That's how it proliferates. So supporting fake gurus is really part of the problem. Anyway, I keep ranting on them because they're a serious problem in this business and why a lot of people are stuck in these garbage coins. All right. Now, anyway, so that's what I say about that. If you get into one of these because of hype, that's your fault. Wait for better prices. Okay, 40 cents. Wait for better prices if you want to get involved, if you believe in these worthless projects. All right, Cardano. Kai, tightening, right. Tightening, that's what they call it. Tightening. I lost my train of thought. They said instead of quantitative easing, quantitative tightening. Alex, hey, good to see you. No problem. Schwartz, what do you think of the Rune? Okay, Rune. Another one. Rune. Let's see. What is that? What is the symbol? Is this the symbol? Yes, that's the symbol. This. Okay, so you get these exceptions. Okay, this is an exception. But before I talk about that, let's take a look at Luna, because Luna is also an exception. Look at this. Right, these are acting strong. In fact, Luna right now, there's a buy signal in Luna right now. The higher low. I'll get back to Rune in a moment, but you brought up Rune, and I thought of this because Rune is an exception, right? Higher low. It's aggressive. It's a higher low. You took out the high. What is that? 92.78, and we're at 91.04. So there's a buy signal in play. Does this thing go anywhere? I have no idea. It's aggressive, but the thing is it is a higher low, and theoretically, it should go for a higher high. One of the problems with this, of course, is you're fighting that resistance. So do you break the resistance or do you fail again? Only the market can answer that question. The question that you can answer for yourself is, are you willing to take the risk that this thing fails? And if it fails, you have to be very quick to get out. Just like I pointed out with gold and oil, people that wanted to buy gold when gold was going vertical, I mentioned it's a momentum game. You want to play that as soon as that momentum turns, you need to get out, right? If it goes the wrong way, because it turns, it gets ugly real fast. So let's take a look at Rune. This is a nice example of something that's doing its own thing. I suspect there's hype, right? I suspect I'll find some fake guru YouTube videos about this thing. Look where you are. So nice move, right? For whatever reason, doesn't matter the reason, I don't care why, into resistance. So if you're in this is a great place to sell. Look at the structure that led to this, right? High or low, nice. Look at the double bottom that developed previous to that. It took some time, and then you had the pop and the pullback. These pullbacks, right? That's what I wait for. You don't always get those, but when you get one, I mean, that's a time to take a chance. And a lot of times you won't get it. The market will just run without that. But if you can spot one of those, you can't argue with it, right? This is a nice time to take risk. Of course, we're looking at this after the fact. Now, let's talk about this going forward. So you're at a resistance. No reason to buy this thing right now. All right, only to take profits if you're in it. Or if you want to let it run, if you have some, you want to let it run, there's no reason to sell here yet. All you have is a resistance. So it's wise to take profits if you have 1-to-1 or greater reward risk. Now, where should you consider the next long if this thing is going to persist? In this area right here. All right, it's the old little mini resistance. It's an old resistance from back here. Just going back. I mean, look at that level. That's a significant level going backward, right? So that level happens to be, what is that? Let me see. That's around $5.31, around there, and we're fooling around $7.31. So a pullback of $2 on something like this would be a proportional pullback and a reasonable place to be looking for a follow-up on the long side for a swing trade. That's a good one for the radar. Okay, so chat room people, my analysts in the chat room, put this one on the radar. I'll try to keep an eye on this one as well, and maybe we can spot the buying opportunity when it appears, and I can put the signal in the channel. All right, this is one of the reasons why I like to do this stream, is because again, I don't pay attention to Rune, and you brought it up, great. Now we can put this on the radar, just like Luna, right? That one, I don't usually pay attention to Luna, but I mentioned in the chat room, good one for the radar, right? So that's what that is. We can now follow this one, track this one, and see if another opportunity develops. And if one appears, then we can assign a risk to it, right? Does that make sense? So anyway, nice chart. I like the development. Now, if this is all on hype, again, just like the other coins, this is acting like this in an environment that's not supportive. So is this thing going to persist, or is this thing going to go back into the garbage zone? It's possible the environment doesn't favor this. All right, so just something to keep in mind. That's why if a long signal develops on something like this, it's wise to keep your expectations low. The biggest mistake you want to avoid here is reacting to what you see here. All right, so anyway, thank you for bringing that one up, Schwartz. Okay, Alex, can you take a look at bar? Okay, took a look at that earlier. Looking for a double bottom or high or low. Okay, answered that one on bar, right? Have I? I can't remember now. Let me see. I think I answered that one. Hold on. Yeah, I think bar USDT. Yeah, we looked at that. Yeah. Yeah, so I answered that one. Okay. Okay, no problem. Peter. Okay, can you look at DOT? Sure. DOT. So DOT is, again, another one. Another of the overly hyped garbage coins. And again, we can argue here that our midterm trend, clearly lower highs, lower lows, right? No question there. Bearish. Our short-term trend, we can argue here that it's sort of range bound. It's mixed, right? It's sort of range bound because we don't have the lower low yet, but we still have lower highs. So it's biased to the bear side, right? We can argue that based on this structure. At the moment, inside of this thing, you have a sell signal developing. Now, that's within reason in an unsupportive environment, especially in speculative altcoins. So No reason to be long this thing. If you are long, that's a reason to reduce exposure or get out of some or take a loss or something, because this is not good if you're long. Longs, if you're interested in longs, I mean, you're looking at this area here, this lower level. What is that? 1583, something like that. That's what you're looking at. This thing right now is at 17, what is that? 1733. So you're looking at, you know, like $1.50 or something of slightly of going lower. Those would be your more attractive prices. But even then, you're in an environment that's favoring resistances. So lower high, lower low is likely. Keep that in mind if you see the buy signal develop. It means that there's a lower chance that it follows through. There's a greater chance that you get stopped out if you take the long. Does that make sense? So I would not do anything with this here. I would just be looking for those supports, and that would be if you're very interested in an aggressive long. Otherwise, I would just look for something better, okay? Like, for example, something like that rune, if that sets up for a long, that would be a much better choice than something like this. Does that make sense? And that judgment is based on the structure, the price structure. Not the specific candles, but the price structure. And from the price structure, we get the levels, right? And that's steps 1 and steps 2 of my training program. All right, I have to keep throwing those advertisements in there. Anyway, yeah, by the way, I have a special running for my new training program for anyone that hasn't taken it yet. If you're new here, if you just go to my website, markpremarkets.com, or if you look at the descriptive portion of this video, I put it in the link at the top. You can get a 34%. The first 12 students that sign up, I'm only going for 12 students this round because there's no way I'm doing 20. All right. And if it's cumbersome, especially with all the other work I have to do, I'll even look for less students. All right. So anyway, just wanted to throw that out there, my advertisement for this stream. Let me see what else we got here. Wedge, looking at, okay. Oh, that, see, thanks for clarifying. Dow Chemical. Okay, not the index. Thank you for mentioning. When I think Dow, I think index. So he's calling this for a short. I mean, the Dow index was still a decent candidate for a short. This here, so lower high on this thing, triple top, actually double top. Let's take a look at the weekly chart on this thing. And I believe this is one of the Dow stocks. So look at this. You have a higher low back here. It's this thing is fighting, okay? This thing is conflicted because you have two situations going on here. This can be very confusing. Let's talk about this because this is a good learning example. You have a lower high right there. This is the weekly chart, okay? You have a lower high. Thing is fighting to produce higher lows and to break higher in a market that's not supportive of it at all. So what carries more weight, the higher low or the environment? Well, we have to go with the environment because what's behind the environment? The Fed. So even though we have these supportive structures, which normally I'd like to see for a long, I would be extremely careful with this because it's a stock, for one. And we saw the S&P and NASDAQ are basically getting, they're potentially getting hammered, right? So with all that being said, if you have this situation right here, while you're generally following, you're in a stock that looks like it's structurally stronger, going for the short side of this would be an aggressive short. All right, you have the sell signal is in play. That's definitely a sell signal in play. The thing is, can it hold or break those supports? Now, you are in an environment that favors breaking supports. So taking the short and having an expectation, saying, okay, you know, maybe I take some profit there if it can get there. But I'll also, if it gets there pretty easily, I'll give it a chance. Maybe we go lower. That would be within reason because the environment favors it. Okay, even though structure says otherwise, the environment tends to carry more weight. Again, the Fed is not supporting this environment anymore. All right, so something to keep in mind. It's aggressive because you have this conflicted situation where it's recently been bullish. Okay, but this can easily change. Once those supports break, it's not bullish anymore. All right, so something to keep in mind. I like the, I would consider this for an aggressive short. I like the idea. I would just keep my profit targets conservative, you know, 1 to 1, 1.5 to 1, and run with that until the structure completely changes. But at least I know I have an environment that's supportive of the idea. All right, so again, Bill, thank you for correcting me on that. That's what he was talking about. Nice observation too. Bill's been coming up with some nice charts. Nice charts in the chat room. All right. eGold. Oh, eGold. Alex, are you the one that always asks about eGold? Oh, there's one guy that always asks about it. I remember someone said, oh, I have some inside information on eGold and it's going to blah, blah, blah. I don't know if that was you. But, okay, so a hyped altcoin, right? As we know, most of these altcoins are going to be in this situation. Now, this structure is not horrible. I mean, it's coming off of this higher high. You're certainly not buying the high, that's for sure. But you do have a lower high that you're fighting, okay? You have this lower high that's still established. So if this market's going to go anywhere, it needs to clear that, number one. This is a weekly chart. You have a potential double bottom in an area where a double bottom is likely to develop. So you have that going for you. It's also taken quite some time to establish that double bottom, as you can see. It's taken, what, maybe 2 or 3 weeks there. Here's that lower high, okay? There's the lower high that we just looked at the weekly chart. So I can see why you may have some interest in something like this as a potential long. But so you have the environment working against you, and you still generally have the midterm structure working against you with the lower highs. So is this a good one for a long? I don't think so. You can argue that you have you have a little mini higher low situation going on right now, and you have this little mini double bottom situation. You have that going for you. But something like that I think would be more appropriate for like a day trade or a very aggressive swing trade if you're into that. I wouldn't day trade these things, by the way. But that, I mean, that's the magnitude you're looking at. I think, in this situation, if you really want to go for the swing trade, you want to measure the risk, I mean, there's enough information there to do that. Risk can be measured from this low right here, not the current candle low, because especially with these garbage coins. All right, this thing's $140. That's a decent amount. That's a decent price. So that means the thing moves, right? It has some beta compared to a coin that's like, 50 cents or 5 cents. You understand? A coin with $140 is going to have some significant movements. So the low here would be, what is that, 126? What's the current candle low? 132. So you're looking at measuring risk. I mean, the wiser thing to do would be to measure it from there because it may need some room to breathe. But okay, because of the price, I would accept that, right? The risk measured here. Your chances, of course, of getting stopped out are going to be greater. Now, I would wait until this candle closes if you're interested in that aggressive swing trade and take out the high of that candle. It's 144 is the high of the candle. So the low of this thing is 132. You're looking at, what is that, 12 points of risk, something like that. So you need to make at least 12 points to justify this thing. What's this high over here? 153. So it's within reason to make about 12 points if it can push its way back up into this area. That's all you're looking at. Because again, this thing is consolidating. You're going to see a lot of false signals, but I mean, it is something that's developing. It is a little mini high or low. Sometimes you can get something off of that. You have to decide how you're going to monitor that and how you're going to deal with the changes if it doesn't go anywhere. All right? Because again, you're in something that generally favors break of supports overall. Does that make sense? So anyway, all right, thank you for asking. Let me see what else we got. All right, eGold. Spotify got really hammered, but it's reaching a good support, and I'm interested in buying some for inventory. So Spotify. Well, okay, Spotify, NASDAQ stock. They had all that drama with Joe Rogan and all other nonsense. Let's take a look. Hammered, all right. Man, hammered is putting it nicely. So yeah, you are certainly at a interesting support level. As far as inventory, I mean, Spotify is a leader in its industry. It's not like Spotify is some altcoin. So as far as inventory goes, sure, I agree. You could take a small bite. Look, you're at a very interesting level. Look at that support that we have on this chart, dating more than a year back. Okay, you're getting into that area. That's what the blue line represents. So you may see some lower prices, but again, when it comes to inventory, you're not really concerned too much with the price. You're really more concerned with the size because you're stepping into something that may go dramatically lower. How much money is this thing? All right, so it's basically about $120. I mean, this thing can go to 110. It can go to 100. It's hard to believe, but you have to be open to the idea. I have to look at I don't know what the what the beta is on this thing, but it's probably very high, right? So you want to find those prices that are extreme, and those are great prices. But when it comes to inventory, again, it's not about always the chart, right? When it comes to inventory, it's really more about a schedule and size. So you say, okay, I like Spotify. Spotify is certainly getting hammered. That's all you need to know, right? And it's at some really low prices. That's a good thing. So now you say, okay, I want to invest $5,000 into Spotify. Okay, great. Now you're going to spread that out, right, over 10 months or maybe a year, and you're going to buy maybe $100 worth or $500 worth each month, right, until you fill up your $5,000 allocation. If you do that over a 10-month period, especially if this thing works its way to $100, because again, we're going into an environment that's not favorable, especially for these type of stocks. It's a growth stock. Then you're likely to average in at a much lower price. So perhaps you buy some at 120, perhaps you buy some more at 110, perhaps you buy some more at 100. At that point, your average price, if you're doing an equal amount at each price, your average price is 110 at that point, even though you started buying at 120. If it goes to $80 and you buy some more there, right, now your average price is going to be much lower. It's going to be like at 100, lower than 100. Okay, and eventually when these things find a bottom and the market becomes more supportive and the Fed starts changing their tune, you have a nice little inventory position from a pretty low price. While everyone else is scrambling to get in, you have some. Okay, and then you continue buying, right, when it changes, and now you're putting on more in something that's more likely to win at that point, right? But that's it. The trick to that game is really your sizing and having a limit to how much you buy. The mistake that people make in that game is they put on too much too fast. Oh, Spotify, it's a great stock. I'm going to invest $20,000 all at this one price. That's enormous risk, right? And now you watch that thing go to 110 or 100 or whatever, and now your 20,000 is worth 15,000 in like a month, right? And now that's not good, and you bang it out at the wrong time. So that's how you play that game. It requires a lot of patience in terms of sticking to your purchase plan, meaning, okay, one time each month, whatever date you choose, I'm going to make my purchase. I don't care what the price is. Okay, I'm going to make my purchase. And that's how you're going to average into it. We played that game with Bitcoin when Bitcoin went from 20K back to 3K. We played that game. We got very criticized for it. A lot of these morons were coming out telling, oh, if you follow these guys, you're going to lose money. Well, we made money on that position, okay, because our average price was like 6K. And we know where Bitcoin went after that. Okay, so that's how you play that game. Of course, we believed in Bitcoin. Bitcoin's the leader in the industry. Spotify is a leader in its industry. It's not a garbage altcoin. So that's why I would agree with you on that. So nice. Thanks for bringing that up, Alex. All right, let's say that's Spotify. All Chinese stocks got hammered this week. Okay, let's take a look. I was looking at NIO recently. What's going on with NIO? Let's see. Chinese. Oh yeah, look at that. Look at that. Let's take a look at the weekly charts. Getting hammered. Beautiful. See, something like NIO, I mean, is that an industry leader? They're certainly up there. I mean, they're competing with Tesla. They're certainly not a garbage altcoin. I wouldn't call them a garbage altcoin, that's for sure. But it's a growth stock. And they're not going to be favored in this environment. So you want to pick up some quality growth stocks. Now is the time to start looking. Okay? Not necessarily jumping in, but looking. And making your list and preparing your buying schedule. Because we may be in this environment for a year or two, right? You have to keep that in mind. It's all going to begin with the Fed. I'm going to tell you right now, with the stocks, listen carefully. With the stocks, this is what you should pay attention to. This. And I tell people all the time, right? That's the bond market. When this thing turns, right? When this thing turns and starts to become bullish, again, this is a weekly bond market. All right, let's look at the daily bond market. When this thing becomes bullish, right, which can take some time, it's going to turn before the Fed starts making moves, right? This thing is 6 months ahead. That's a discounting mechanism. That's how it works. So this thing turned 6 months, about 6 months before Powell changed his tune, right? Powell changed his tune in December. This thing turned in August. Right? So it's not exactly 6 months, but you get the idea. So the bond market will turn first. And the other thing you need to keep in mind is it's not a one-to-one relationship. So if the bond market turns and the bond market becomes bullish, I'm not talking about 1 or 2 candles. I'm talking about the bond market's been bullish for 3 months. And it's got a clear higher low and a clear higher high. When you see that in the bond market, That's going to be the signal that the stocks are going to turn soon. As you can see, the bond market's nowhere near being bullish. Okay, you see that? So, because the bond market rising means rates are going lower. Rates going lower is good for stocks, especially growth stocks. So that is going to be the signal that I'll be looking for to really start considering the long side of stocks. Right now, it's a good time to start accumulating some light inventory, but we're nowhere near a buy signal, a real long-term buy signal. We're nowhere near one. Does that make sense? Keep an eye on the bond market. And like I said, it's not one-to-one. Okay, Mr. Plow, how are you? No problem. Good to see you. You can come here anytime. Alex, I heard that China doesn't allow SEC to investigate some of I wouldn't be surprised. I mean, China has a lot of restrictions. So, that's why you have to be careful with Chinese stocks in that sense, because there may be some unexpected things that come out. If they're not allowed to regulate blah, 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 if the SEC can't investigate blah, 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 a company like NIO can be lying to you. Why would NIO lie? Because they can. All right, so just something to keep in mind. We all know what happens when a company lies. Rune is a privacy coin. Makes sense. It has, okay. Oh, that's interesting. All right, good to know. Okay, Vanja. Okay, hey, no problem. Hey, Mark, I remember. Oh, Mark, you were the guy, right? Mark, you're saying that I had a good call in New Zealand? That was your call, Mark. Mark made a good call, and I'm not talking about me. This is the guy that called New Zealand, and I put it in the chat room, Mark, as a result of your mention, and the New Zealand's working, right? I put that as a signal, Mark, in the chat room. So all my students should, anyone that took that trade owes it to you. Anyway, thank you for bringing that up. That's a great thing about this stream, right? People bring up something, I can spot an opportunity, put it in the chat room as a signal. Anyway, thanks for stopping by, Mark. Okay, Alex, it's me with eGold. Right, eGold for review. Okay, right, Alex, you're the guy with the insider, right? The insider, eGold insider. Okay, cool. Wedge, okay, no problem. I actually like to see eGold lower, okay? Team behind eGold, very well connected. Ah, interesting, okay. Obviously, and Alex got some connection to that. All right, hey, Ben, good to see you. How are you? All right, got all my students back. Ben, have you been in the chat room yet? I know I think I accepted you. The thing with the chat room has been, once you get through the first level of authentication or whatever, validation, I then have to manually go in there and approve you. Because I'm trying to keep the chat room only to students, and I got other people trying to get in there that shouldn't be trying to get in there and all that other stuff. So I have to manually approve you, which takes me a couple of days because I don't always go in there and check that right away. All right. So anyway, hopefully, I know I approved some people. I think you were one of them. Okay, cool. So and I'll be checking that again, hopefully today. I'll be looking in there. So I think I've answered everyone's questions. Yeah, that's why I like eGold. Very rare to see such a powerful team into Williams are. It's true. It's true what you say. I agree with that. Okay. Okay, cool. So I think I've answered everyone's questions, and I've been talking for a long time too. Do I have any other questions? So cool. Some great questions here. So again, if you're new to my stream, okay, and you want to know, I have most of the people here are students. If you want to become a student, just go to my site. The link is in the descriptive portion of the analysis. Right now, 12 students will get that savings that I put. I made that coupon for 12 students, and you can get my training at a better price. The reason why I raised the price so much is because you're getting personalized feedback from me. I am a chartered market technician. I don't throw that around much, but chartered market technicians are not easy to come by. It's not easy to get that professional designation. It took me a few years to get it, okay? And so you're getting personalized feedback from someone with that designation, which, like I said, it's a rare thing. So, and on top of that, I'm extremely busy. And it's when I get into that program, you have to understand that I'm in it with you, right? So you guys hand me assignment, as all the students know, you hand me an assignment, I have to evaluate your assignment, and then I have to send you feedback, right? I have to send you back to let you know if you're doing it right or wrong, which is extremely valuable because you can learn something, okay? And I can tell you this from my own experience. Over years of doing the wrong things, you could learn something, think you got it right, and meanwhile, you're using it completely wrong, and you're using it wrong for years, right? And not understanding why your results are a complete mess. And basically you could flip a coin and get the same result and not understand why. I was doing that with a particular oscillator that I was told is basically magical, and I believed it, and had no idea that it was random. I thought markets were more, I assumed that a market was more predictable based on information that you can get from a chart. But I was clueless, right? And I believed in this oscillator and blah, 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 but I could never make any money consistently. Randomly I could, but I couldn't figure out, I was missing this one thing. And they would, oh, you're just not using it right. You need to spend more time with it. Oh, it's very subtle. It's this, it's that. It's all this nonsense. They would always rationalize, but the reality was the results were random, all right? And it took me a long time to realize that this is all nonsense. And you have to look at the game from a statistical perspective, especially on the day trade time frame, which, that's what I was using it for. And so if it would have been nice if I had someone with a lot more experience tell me what you're doing is completely wrong, and what you're doing, you might as well flip a coin. I don't know if I would have believed that person, but it would have been nice if someone told me that. And then maybe I would have researched it further. But my point is this. I'm telling you if you're using these things right or wrong. And if you're using them wrong, I'm correcting you. So now, at least going forward, you can be confident that you're doing it right. And the effect that you should expect from that, the measurable result, should be at least more reasonable. Okay? Of course, I can't make any promises that you're going to be an enormously profitable trader. And, I don't have the rented Lamborghini in the background that I'm driving around, implying that you're going to be able to get one of these too. It's not like that, right? I'm not selling a dream. What I'm selling is basically perspective, right? You're getting a reasonable perspective, and you can apply it to any market so that you separate yourself from the major liability that we all must deal with, which is human nature. All right? It's a liability, and we all start out with it, and the more you can minimize it, the better. All right? That's the whole idea. That's why I'm strict on people as far as following rules, following instructions, and all those other things, because you need to be able to do that kind of stuff when you're dealing with the market, because the market is harsh and the market is random. So when I tell people about trades, I'm not trading the market. I'm trading rules. The rules, either they're there, okay, or they're not there. If the rules are there and I can't argue with the rules, then I have a potential opportunity where there's some risk involved, right? And I decide if I'm willing to take that risk or not. Just because I'm following the rules doesn't give me a statistical advantage. But what it does is it reduces the chances of making the emotional error, that's something we have control of, right? We have control over ourselves. The rules help to minimize the human nature aspect, the fear of missing out, the bias of thinking, overestimation bias. I think I'm better than the market, or I think I know what I'm doing. I have some experience, all that nonsense. Okay, we all suffer from these things because it's built into the human nature. We're built to react to information, especially visual information. Visual information on a chart carries very little weight. Okay, so most of what we look at is just noise. It's nonsense. And using something like confirmation bias, we think we see things, or we want to see things, or we want to be lied to because we need hope, because we don't make any money, right? So we develop this emotional need. The purpose of my program is to help you minimize all of those ineffective or negative effects that we get from human nature. Human nature is one of the obstacles, only just one of the obstacles that hold us back in this business. Of course, the other one, is the industry itself is set up for us to lose, not win. So, and the third one is the random nature of the market. That's not a good thing, right? So keep in mind, if all the information, just for those of you that consume information in other places, or I'm going to listen to my fake guru because he makes me feel good, or whatever, okay, all those people, I'm going to follow my oscillator because it just makes me feel good. Okay, whatever that illusion is for you, that illusion of control, you keep doing that. But understand that if all of these tools and all of these pieces of information and all of this garbage that's fed to us as retail traders, if there was any statistical relevance to it, you would not see the kind of research or results that we see about the performance of retail traders. You would see, 60 or 70% of retail traders make money. And you would see this regularly, right? But instead, we see the opposite. We see, 90% of retail traders lose all their money. We see this, and what do we say to ourselves? Oh, I'm better than them. I'm smarter than them. I know math. Yeah, I'm gonna do better than a retail trader. Yeah, I'm not a retail trader, right? That's what we think. But meanwhile, my point is, if all this garbage out there if there was any advantage to using it, we wouldn't see those statistics. None of us are better than that, right? We can't beat a market that's random. So you need an inefficiency. That's how you beat a market. Market makers, or a lot of these algo traders, they say, they make all kinds of money. All right, algo. How do they do it? They're not playing a market game like we're playing. They're playing an engineering game, and they're taking advantage of very unique inefficiencies that we can't even see. That's a statistical advantage. Are they going to share that information? I don't see any algo guys out there. So let me show you my 90% win rate algo. I'm going to show you how I programmed it. I'm going to show you how to get to be number one in the order queue, in the microstructure of the market. I don't see any of those videos. How come I don't see those? All right, they don't share that information because it's proprietary, and of course it's secret. That's how they make money. And if you share that secret, then other algo guys will do it, and any inefficiency that they're capitalizing on will vanish. When I started out in this game 20 years ago, okay, the group that I worked within, there was a lot of guys, made a lot of money every day, and I couldn't figure at that time, especially, I had no idea how we were making this money. All right, but when I look back, I realized the way we were making that money was through a specific inefficiency. So whether you were like, we never used charts back then. There was no such thing as a chart. We used to read the level 2. We used to tape read. That was a skill. They used to say, it's a skill, right? They trick us into thinking it's a skill. Was it? Well, the market, we were taking advantage of a very specific speed and efficiency, the same that algos take advantage of today. That's why a day trader, someone like me, at that time, no longer can play that game because the algos got in on it and took it away. That's what happens when you share an inefficiency or a statistical advantage. When it's known like that, it gets taken away. That's why you don't share it. Does that make sense? That's why you don't see professional fund managers or algos or whatever sharing their strategy publicly. But fake gurus, plenty of those. Plenty of fake strategies. All right. Most of the garbage that you see on YouTube, by the way, is random. I see lots of strategies on YouTube. Oh, look at this. I made it's a 90% win rate. The only strategy you need, blah, 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 right? I see that all the time. Meanwhile, it's random. All right, just so you know. The moving average thing with the RSI and blah, 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 it's random. Get used to that word, random. All right, that's enough. That's enough rants today. I'm talking too much. My voice, I see people leaving the chat like crazy. Look at this. All right, so let me just see here. Just going to finish up the chat here. Can you check the Fed funds? Maybe explain a little about it, Alex? I mean, the effective funds rate. What is that? Fed funds? There's a chart on that? Well, I mean, that's just going to be the interest rates, right? I mean, I've been talking about that the whole time. Oh, look at that. There's a chart on the Fed funds. What does this say here? Okay. So that's just a chart of the interest rates, okay? Effective Fed funds rate. Is there, can we see the weekly on this? Because the daily doesn't mean anything. That is the weekly. So all right. This is not really a very useful chart, except that when you're at something like way up here, right? That's stimulus. That's low. This right up here. Let me see the Fed funds rate. Right now, what are we at? No, I'm sorry. The stimulus is when it goes lower like this. I got it reversed, right? So we're still at this low rate, okay? And you may say, but rates are so low, blah blah blah. Why is the market having a hard time? We didn't raise rates yet. The rates up here, these are basically negative for the market. What year was that? 2018, right? Rates were much higher, and this move here, right? The Fed lowered the rates clearly, and that was the stimulus. That was behind all the bubbles, the NFTs, all the other nonsense, right? That's printing money. Now we're back at this stable level, and you're saying, oh, okay, look, shouldn't rates be? Shouldn't stocks still be good? It's the anticipation of the rising rates that matter, not where the rates are now. Okay? If the Fed never changed if Chairman Powell had never changed his talk in December, if he said, nah, there's no inflation, we're just going to keep things the way they are, the market probably wouldn't be as negative as it is right now. Of course, no one saw the geopolitical tension coming, right, out of Eastern Europe. No one saw that coming. Sure, that would have caused some problems, right? That would have caused some pullbacks. But with a supportive market behind us, it probably would have been very limited, not what we're looking at right now. So it's the talk that rates are rising. So this chart is going to start moving higher, right? And the market's priced that in. The market knows what this looks like in the future. So you can't really use this chart for anything, right? I mean, you can't really go anything because this is after the fact. And the market's a discounting mechanism, especially when it comes to rates. So this is useless, all right, basically. So thanks for asking, though. What you always want to know is what the Fed is projecting and how people are perceiving it. And right now, the Fed says tightening. So the Fed hasn't technically tightened yet. When they tighten, this chart will rise, okay? But the market knows that. So the market's pricing that in. So we'll see how that goes. But anyway, that's the story there. Thank you for asking about that. I wasn't aware of this chart. Okay, so let's go back to BTC. I know I'm running out of people here. I'm gonna wrap this up here in a moment. Man, I just like to talk because I don't get to talk that much normally, as you can tell. So it all comes out on you. All right, let me see here. Wedge, perception. You can have a good perception or a bad perception about a subject. Clouds your insights if your perception is bad. Well, yeah, that's right. I mean, it's a bias, right? A perception is basically a bias, but the market can have a perception, the market overall. And if the market has one, especially big money movers, you have to go by whatever they think because they're going to vote with their money, they're going to bet with their money, and you're going to see the result of that, right? And that's really what we want. That's whose opinion, if you want to call it that, we want to go with. And they bet on their opinion, and we can see the results in the price, right? So that's where my opinion comes from, is the price. I don't know what fund managers are really doing with their money. All I can tell is I look at prices of certain things, and that tells me something of how they're betting and what their perception is. Like right now, the perception of the future is rising rates. Rising rates is bad for a lot of things. So yes, that's a bias, but if it's true, markets are going to suffer, and they're suffering now. They're suffering as a result because it's pricing in. At some point, that perception will change, okay, and we'll see it reflected in the money. We'll see it reflected in the bond market, and that's what I'm looking for as far as investing in stocks. That's what I want to see. Okay. Otherwise, right now, investing, we're at good prices. Not a bad idea, but small. Right. This is not a good time to be aggressively investing. Anyway, thanks for mentioning. It's great if you are a newbie sitting on the fence. It is. Oh, thanks. Yeah. Thanks, Bill. And I do make every effort. I want that experience to be good. I still have to make some improvements. I'm working on those, but they're coming. And either way, the feedback is really the great value of the program. Are the webinars on GB still valid? Well, good question, Dan. The webinars are, yeah, they're still valid. I mean, we still work with the same concepts and the same ideas generally. I haven't looked back at most of them, but I mean, we have one on support and resistance. We have one on Elliott Wave. We have some on options. We have, a few things going on with those webinars. The webinars are more general though, right? They're not as specific. They're more general. And, I made those that way on purpose. In fact, I'm going to be removing those webinars in the new version of our site that's coming out. I mean, we're going to be changing like the dashboard and stuff because we're going to be moving everyone over to the server that you guys are on now. They're just going to be in a separate section so that we can send out push notifications. And so I'm actually going to remove those webinars. So any Greenbridge member that becomes a member and they want education, they're not going to have those webinars anymore. So Greenbridge is just going to be focused on one thing, and that's going to be signals and investing ideas. That's it. People that want training, they can come to my training site, and we can start from there. So I am going to remove those webinars. Anyway, so thanks for mentioning that. Yeah, I have one on there. Oh, so the one on that webinar, I talk about the VWAP, the volume weighted moving average, which is a common day trader tool, particularly for stocks. And I talk about a couple other things on there. Yeah, sure, that's still valid, of course. But, to day trade, though, like I said, the environment is going to play a big factor. So you need to understand your environment. But in something like a volume-weighted moving average, like on Bitcoin, you may want to say, oh, I'm going to try that on Bitcoin, on a 5-minute chart with a VWAP. The thing with that is you have to question the volume. So using, I guess maybe the futures contract would maybe give you a more accurate sense of volume, but that could be tricky. A VWAP is nothing more than a moving average, right? It's a volume-weighted average price, or it's a moving average based on the volume that's going through instead of just price points. It's not really, there's still no statistical advantage to it. The way day traders would use something like that is they're looking for a trend. They're looking for price to touch the volume weighted moving average, right? If the price is higher, it goes back to it, pulls back to it. That's the place where you look to buy, and that's what they do. Right? And if you're wrong, you get out, take the loss. If you're right, you make some money, whatever. That's what day traders do with that, especially stock day traders. So can you make money with that? There's no statistical advantage to doing it. So the only way to really get ahead of something like that is you need to be able to pick your points, just like we do with our levels, because that's where your probability is going to at least be somewhat better as far as what you're expecting at that price point. And when you have a winner, you have to do your best to let that winner do better than what you're losing, right? You have to have that positive reward risk. You have to try to do better than 1-to-1, because when you day trade, your costs are a lot higher, and that friction prevents you from making any money over time. So in order to beat that, winners have to run. And the problem with that is winners run randomly, right? So you don't know if this one trade you may take may be a runner, it may not be. So you have to be very quick to adjust. And there's going to be many times when it starts to go, it turns around, gives you some noise, you get out, and then it goes, right? You're going to deal with that all the time. It's very frustrating. Also, when you're dealing with missing moves, that's very, very frequent. When especially on smaller time frames, missing moves is part of this game. You have to get used to that. You're going to miss thousands of moves because not all moves have an equal probability or the same risk. Even though the move may have worked out great after the fact, the question that you always have to ask is, what is the risk that you would have had to have taken? The other big question about moves that work out well is, was there a signal, right? A market can move with no signal. The market doesn't owe us anything, okay? The market can just move for whatever reason out of nowhere, for just some random reason, right? Some news comes out, market moves, and that's it. There was no pin bar, there was no inside bar, there was nothing. It just goes. So you're going to see that a lot, especially on smaller time frames. So that's why you have to understand the context of what you're dealing with when you're looking for day trades, okay? Anyway, and also what you're competing against too. The day trade arena is the most competitive in terms of algos, because that's where algos do the best, right? Because there's so much noise. Algos can capitalize on things that you can't even see because they're moving at such a fast rate, right? You're talking about fractions of a second. They're making transactions. You can't even see them. They don't compete on the larger time frames. They're there, of course, but it's not the same game because the risk is greater, right? On a larger time frame, you can't take a huge position on a large time frame. You can, but you better have a lot of money because the risk is greater on a larger time frame. And on a day trade time frame, the risk is smaller, but you can lose a lot more faster, right? So, but an algo, they're only looking to make like a penny, right? And they're risking like a half a penny or something like that, right? With the stocks, for example, they're making like 2 pennies, they're risking 1 penny, or whatever the game that they're playing. And they can do that in fractions of a second. We can't play that game. So you're competing with them. And they've taken a lot of that the day trader money that used to exist because of that inefficiency is out of the market because of them. They take all that money out. So that means there's less money for you to make, okay? That also means that you have to understand too, the retail component is a lot less than it was. So that's another factor that weighs on day traders. There's, retail money, Robinhood people, is where your money comes from. It's like a poker table. Would you rather play poker at some small poker room where it's all the same guys every day who all know each other? Would you rather play poker there, or would you rather play poker in Vegas where you get lots of drunken tourists? Any professional card player who wants to be a professional goes to Vegas and they move there. Why? Because your chances of making money are greater because you have lots of drunken tourists that show up at these poker tables who have no idea what they're doing. Right? Yeah, I'm gambling in Vegas. I'm going to throw $1,000 away. And the professional poker player is there to collect the money. Okay, so this works the same way. Right now, the retail component is out. As we can see evidence of that everywhere, which means less money for everyone. Right now, you're competing with more professionals. It's not a fun game. A lot of fake gurus are going to expose themselves in this environment if they haven't exposed themselves yet. Okay. So I'm going to wrap this up. I trading on lower time frame charts. I don't even have time to place the orders. Yeah. There's a lot I can tell you about that. I use a market buy. You can't place market orders. That market orders are a really bad idea especially for something with wide spreads. All right. And I must thank you once more I can't believe you provide this graduates for. Well, it's free for you. Bill, it's not going to be free. For all the students that contribute, it's free. But for people that don't want to contribute, I'm actually going to start charging for students that go through the program, but they don't want to have like someone telling them what to do, basically, right? They don't want someone to say, hey, you have to produce 2 charts or whatever. They just want to be passive and they just want to observe. Sure, no problem, but they're going to have to pay something for that. That's their contribution. I'm not running that chat room for nothing. Right? But you guys, why am I not charging you guys? Because you guys are contributing. You guys are offering, you're providing some form of value. Charts are very valuable with your analysis on them, right? That's the whole idea. And it makes it valuable for all the others that are in there. So I can't have a passive guy doing nothing in there and just watching everyone else's work. I mean, we put out that trade for the New Zealand dollar, thanks to that guy, Mark. And that was a valuable trade so far. I mean, it hasn't reached its target yet, but it's green. Okay, anyway. All right. Algos pay commission on buy and sell orders. Oh yeah, of course. But the thing is, algos don't pay the same, right? Because if you're a high volume trader, if you're moving millions of dollars or millions of shares a day, which some of these algos can do, of course you better believe the exchange is going to favor you and that you're not going to pay the same price as a retail trader. So their cost is going to be not the same. It's going to be more advantageous or beneficial. So cost is not going to be as a big deal for them. All right, you have to understand because they have that pricing advantage. They have that volume advantage. That's very common. There's nothing new about that. That's been going on on traditional exchanges forever. Okay, I lose more on commission. Right, that's why you can't win, Dan. I keep telling you. That's why as a day trader you can't win. And these people that push forex day trading, like the forex day traders, that's even worse. So they're just fooling everyone. Like, hey, look at my rented Lamborghini. I trade the pound yen. I trade the yen crosses. I'm very sophisticated. Right. Meanwhile, you can't make any money with those spreads. Hey, good to see you. Have you considered having more social? I don't underestimate. Yeah, right. Travel. That's a good question. I do actually plan. I'm going to say this. Man, I've been on too long. I got to wrap this up. But I'm going to say this because, you asked the question. I do plan to have more of a presence. So you have to understand, it's a lot of work for me. I have to try to get signals out. I'm going through all these technical changes right now. We're trying to change this thing with Greenbridge. And so I have to get all that out of the way first. Like I said, I'm planning to get back on TradingView next Monday. So that's going to be one new feature on the social side. But I do plan to, we have a large free following, and I do want to provide something for our free members, trade of the week. I haven't been able to, I don't have time to get those out. So I'm trying to figure out, the best avenue for that. But I will be improving my social presence. I mean, fake gurus, that's their whole business. Okay. Someone that's real has other work to do, right? Like I can't be marketing all day because I have a lot of other work I have to do. A lot of work is just nonsense. I mean, trying to figure out how to fix this Greenbridge situation. It'd be nice if I had someone to take care of that for me, but I don't. I have to do it. So, I have my developer crew now they're on it now, okay? But I had to figure it out first. They don't solve problems for me. I have to basically give them a job. I have to solve the problems and say, okay, here's the job. You guys do the job. And now they have to fit it onto their schedule because they don't just work for me. They're a very busy agency, right? They work for a lot of people. So he tells me, oh, okay, well, we can fit it in here. And here's how many hours it's going to take us, okay? And, oh, okay, great. So now I got to wait for them. I can't say, hey, man, I want this done tomorrow. He's going to be like, yeah, I'm going to charge you $1 million now. I can't do that. So anyway, you understand, but it is part of the plan. And I'm going to be working on a lot of YouTube improvements as well. Okay, so you will see that. So I appreciate you asking, Travel. I know there's a lot of free people out there that can use the perspective, and I understand. And I do plan to improve that. So thank you for asking. Okay, let me see here. So I understand advantage. You covering more bases of stocks helps you in, yeah, but okay, no, I appreciate that, Wedge. No, Bill, I mean, you've been great. You know, I think you've gotten a decent, you've learned a decent amount through the program. I've corrected every single one of your assignments, so I know I've seen your progress. And, that's why you guys were all prepared for that chat room. And you guys are doing, what I asked, and it's great for everyone, right? Not just me. So we can see opportunities as they're developing. We're working as a team, and that's what I'm trying to build, like an analyst team. You guys don't have to call trades, but if we're all spotting something and I see something, hey, great, possible opportunity right there. And then, we all benefit from that. So anyway, I'm glad you're part of the team. Okay, no problem, Dan. Yeah, I got a lot of my regulars in here. Okay, no problem. Well, so Travel, the thing is, I have my group that's these guys are all on the same exact page. That's what I wanted. They've all gone through the same program, the same training, the same everything. So I don't have a guy come in and say, oh, look at the RSI. It's a long signal. I don't have that problem, right? No one in my chat room is going to say something like that because we all know that that's worthless information. But someone that's not been through my training program is not going to know that. So they're going to come in and they're going to tell me, oh, the RSI, oh, the CCI, oh, have you seen the stochastic? Oh, have you seen the 200 period moving average? Oh, have you seen this? And it's just going to be, it's just going to get in the way, right? So I put this chat room together for students to further develop and to be all on the same page, compare notes, and none of those newbie questions, right? Because they've all proven themselves through the program. That's the purpose of the program. Anyway. Okay, so no problem, you guys. All right, cool. So like I said, my goal for next Monday is to be back on TradingView. So I'll be simulcasting, and I won't be able to talk about all this promotional stuff anymore, right? I'm sure you guys will be happy about that. Too many commercials, right? No commercials when I'm on there. So anyway, cool. So hey, everyone, thank you all for your great questions. It's been a great conversation. I'm glad I was able to get through all your stuff here. Again, don't get all excited about this Bitcoin situation. It's just noise. Wait for the levels, right? That's the key thing. Just wait for the levels. We were at 35K or we're at 42K, right? Those are the only two levels to be worried about. Anything in between is going to be noise. It's going to be nonsense. Don't get sucked into it. Okay. No, I mean ideas from social marketing point of view. Oh. Yeah, well, of course, I'm open to all those. And I've spent a lot of time researching, first of all, watching what other fake gurus are doing because they're very good at marketing. That's what a fake guru, that's what makes them so good is their marketing skills, right? Not their market skills, their marketing skills. And so I've evaluated a number of them, especially ones that have grown from very small to pretty decent size. And I've seen what they've done. So I've spent a lot of time with that. So sure, I'm always open to those ideas, but I do have a plan. It's not like I'm just sitting here reacting to things. I do have a plan. It just takes me time. And, my time is spread out in so many things that it's hard for me to focus like on something like that. But of course, that's a very important area, so I do have plans to expand that area. All right. So thank you for mentioning. Okay, you guys. So social marketing, yeah. All right, so hey everyone, thank you for all your great questions. Thank you for participating. Thank you for all this great conversation, right? This is it's helpful for everyone. And hopefully I'll see you in my training program. Again, right now, first 12 students, you can get that 34% off if you're into it. After those 12 students, the price goes back up. I've raised the price, like I said, so you can get it cheaper. and we can go from there. Otherwise, if you're interested in Greenbridge, that's just for signals, and we're making some big improvements there as far as, we're going to be sharing push notifications instead of text and email. We're going to get rid of the text and email, and we're just going to do push notifications because it's better for us and it's better for everyone else too, because we'll be able to send out more stuff and faster. Okay, so that's coming. It's not there yet. It's going to take some time, but it's coming. All right, I got the agency working on it. So that's Greenbridge. The link is in the descriptive portion of this analysis. Other than that, okay, we'll be your fake gurus. Great. All right, cool. So again, everyone, thank you very much for listening and taking some time here and taking some time here with me. I know it's some crazy hours in some of these places. So enjoy the rest of your day, the rest of your evening, wherever you are in the world, and thank you very much for watching.